resources and connections to help business succeed in international business. And we're really pleased to be doing this program today with our two speakers, Beth Pride and David Stepp. And a lot of the time in California, when people think about international business, they think of exporting. California is a very, export-centric economy, and there's a lot of talk about it. But importing goods, either for supply chain, for manufacturing as an input into manufacturing, or finished goods for distribution and resale, whether it's by the Walmarts of the world or by much smaller firms that are importing and distributing specialty products, is also a really important part of international trade. And there's a lot of rules and regulations that go along with it. And the more fluent you are knowing what you're doing, the more efficient your business will be, and you're going to keep yourself out of trouble. So we're really fortunate to have two experts in this field with us. We've got Beth Pride, who brings more than 30 years of experience in global trade and international logistics. She's a licensed customs broker, and correct me if I'm wrong, you also were a truck driver early in your career, isn't that right?
1985, I was a truck driver, yeah.
Yeah, so she knows logistics from the ground up, literally. And then we've also got David Stepp. David is one of the board members of the World Trade Center, Northern California. He's a trade lawyer with who's worked and lived overseas, expertise in compliance, international trade agreements, and also brings 30 plus years of experience in the international trade world to us. It really is an honor for us to have two such knowledgeable and distinguished people with us today. So with that, I will turn it over to you, Beth.
Great. So the reality is that companies set up import-export businesses every day, and they don't put 1 ounce of thought into setting up a compliance program. And so that tends to result in bumps in the road, delayed shipments, increased costs, and things that they didn't exactly plan on. And so our hope today is to take you through some of the key things that you need to worry about. And bottom line is, everything starts with classification, and that may be something you've never even considered. So I'm going to hand it over to David right now to kind of give you the baseline of what classification is, and then we're going to give you some real life examples.
Thanks, Beth. Pleasure to be here today. And as Beth and Kevin were talking about, on the import side, companies who are in the business of exporting often will import components and parts and sub-assemblies and other materials for their business operations. So in talking about classification, I think the first issue you really need to consider is your tariff classification. And the tariff classification is in the harmonized, it's the HTSUS, the harmonized system, harmonized tariff system of the United States. And that went into effect in 1989 here in the US. And it's based on an international system that's consistent up to the first 6 digits. If you ever look at a tariff code that your customs broker or other service provider gives to you, it's a very long number that has a very product specific relevance to it. And so the tariff classifications are consistent around the world up to the first 6 digits, and then the digits after that, up to the 8 and 10 digits, really on a country specific basis will narrow down what is covered by that. What is really important about the classification of a good coming in is that is really kind of the first step in determining what duty rate's going to apply, but also what other special duties and special programs are going to apply. It has a big impact on the Section 301 tariffs, these China retaliatory tariffs that you've been hearing about probably, also the Section 232 steel and aluminum tariffs. And we're going to cover those issues as well as some of the anti-dumping, countervailing duty issues and other value issues. But it's very important to put a compliance program in place, have the folks that are in charge of the tariff classification to be trained, and also to work with your customs brokers and logistics providers, confirming that those are correct. And just briefly before I hand it back to Beth, the HTSUS also has what's called a Schedule B, and that is for the export of goods from the US. And very often when you have an import, you have an export. There is, it's very important to understand what the export Schedule B is. It tracks the import tariff but it can differ in certain key places. But with that, I'll hand it back to Beth.
So I want to talk a little bit about what happens in companies, because companies are amazing and innovative. They build great new products. They build those products, and they want to have the components come in to make those products. What's happening in a lot of cases is the person that is shipping those products may not understand the harmonized tariff schedule. And so I'm going to use the couriers as an example, because they have built-in tools that won't allow you to create a shipment without actually selecting a tariff number. And sometimes the shipper, not being versed in the harmonized tariff classification process, they actually pull the drop down and they pick the first tariff they can find. Or they find a number that sounds kind of like it's the right one, but they don't understand the process behind assigning the classification. And then even worse, if that classification worked, then they use it for every single item that they ship. And that's a big problem. And so the first thing that we do is we look at, what are you sending in? What's actually being shipped? Has it been correctly classified? And we recommend you build a product matrix that lists out all of your correct harmonized tariff schedules. So David mentioned that if you incorrectly classify something, it could have downstream issues. And so I'm going to use the example he brought up, which are these section tariffs, the 301 tariffs, which is pretty much on everything under the sun, and then the 232 tariffs, which are the aluminum tariffs. What we found is that nobody cared about classification until these tariffs started getting assigned. And then they'd see their import bill and they would see a tariff rate of 25%. And they go, oh no, I can't afford a quarter of the value of my merchandise to being paid into duties. So some people would just pick another tariff number. As the tariffs were rolled out, all of those tariffs that eventually used to work now are getting assessed some form of a tariff in the majority of the cases. And so it's really important that you get it right. So you want to look at, and we're going to send this out, Diane's going to send it out as a follow-up, is there's a great site on the Customs and Border Protection website called the Informed Compliance Publications. And there is an Informed Compliance publication on harmonized tariff classification. And so we highly recommend you learn how to classify your products. And if it is subjected to a section tariff, then there's actually some alternatives. Maybe there's tariff engineering that you can do. And I'll give you a really good example. I used to work for Hewlett Packard. And the way the tariff schedule works is printers have one classification and parts of printers have a different classification. If a printer ships without an ink cartridge, it can't print. So it's not a printer. It's classified as parts of printers. The parts of printers classification may not have the section tariff where the printers would. So if you just ship and package your printers differently, you might be able to avoid the tariff. So things like that you want to consider. And David, you might have some other example of people have been using the wrong classification that has the tariff. And if they actually had classified it correctly, they would not be paying the tariff. And there's things you can do, such as protest and summary corrections to correct that. But those are services that you offer.
That's right. As Beth was saying, the tariff classification, it certainly is triggering these Section 301 and 232 special tariffs. And also, as she noted, early on, some companies, and especially the exporters, were saying, well, we'll just classify it under another provision that's not covered, so that you can get around that and avoid those tariffs. And then the tariffs then were applied to those new classifications. We're finding that U.S. Customs and other agencies are auditing importers to see what classifications they were using. And when they weren't using the correct ones, were they using those to circumvent these special tariffs? So there's the compliance side to that, but there's also, a duty saving side, because duty rates are ad valorem, or a percentage of the value of the goods. So if you are misclassifying a good, there may be a provision with a lower duty rate. So it's all very important. Moving on to our Section 301 and 232 duties, briefly, as we've been talking about, the Section 301 duties are against China, against their unfair trade practices with respect to intellectual property and the issues with the U.S. on that. Those have been in place for a couple of years now. There have been product exclusions that have been issued, and some of those product exclusions are starting to expire, and there's some extensions that have been applied for. So they're very important. The percentage of those exclusion requests that have been granted by the US government have been going down. I know there are a lot of those exclusions that are all set to expire very soon, and we're all waiting after submitting our submissions for the Section 301 exclusion extensions to the USTR. But with the trade war that's going on with China, things aren't looking so great these days. So it's very important to keep track of what's happening with that. But again, always going back to your tariff classification. Beth?
I want to add to that actually, because a lot of companies, they start paying attention when they see a bill. And so I want to talk really basic stuff. Whenever you get a bill for an import, that's a record and you need to retain that record. But whether or not you get a charge, you should be making sure that your customs broker used the correct classification. And I'm going to tell you a little secret. It's free. You can sign up for an ACE account. It's also, you can do this on the customs website. You can sign up just using your importer identification number, and it gives you access to all of your import data. We highly recommend getting a report of your ACE imports so you can see all the classifications that you are using. I just ran a report for a company that we work with, and they sell automobiles, and their ACE report showed that they had tricycles, children's tricycles. Didn't really work right. Somebody made a mistake on the tariff classification, so we were able to fix that. And believe it or not, the children's tricycle tariff was higher than what they should have paid, so we got to save them some money. So get ACE, run your report, and manage what you're importing so that you can know what's going on. And to David's point about the exclusions, if you're not paying the tariff now because of an exclusion, and it's going to go away, you've got to plan for that. So another example I want you to think about, not just these tariffs, but you should always be thinking about the total landed cost of your products when you're importing. So I know that I need to import a printed circuit board so that I can make my product. And I want to bring that in from China, or I want to bring it in from somewhere in Asia. I should figure out exactly what my landed cost is for that item before I even sign a purchase order to acquire that printed circuit board. I'm going to give you an example of one of our clients. It was a devastating example. So they produce ink, and they decided if they moved the production of their ink offshore to China, that their US labor costs were so much higher, they'd save a ton of money by moving offshore to China. So they didn't calculate the landed cost. They picked up their operation. They moved it to China. They set up everything. The one thing they did is the secret sauce for the ink, they still made in the US and they shipped it to China. And so what happened is when they took the raw materials in China plus their secret sauce and bottled up their new ink, the Chinese government still considered it a US product because of the secret sauce. And the Chinese government assessed a tariff for the export of the product. So it turned out that their move of the ink manufacturer to China cost them more than it cost them to manufacture in Michigan. And so after about a year of losing their shirts, they decided to move the operation back to Michigan. When they applied to start manufacturing ink again in Michigan, Michigan said, no, it's poisonous. We don't want that in our state. We don't want, and so the EPA rules came into effect, and they couldn't move the manufacturing from China back into the US. They're still making ink in China. We're now filing a program called Drawback, which means when they import the finished ink and it's expensive and they re-export it around the world, we actually get some of their duties back. But it's been a costly lesson for them not calculating landed cost. And David, you probably can add on things that people forget to include when they calculate landed cost.
That's right. As I mentioned earlier with respect to anti-dumping duties, and again, I'm going to be talking about that a little more in detail, but there can be special tariffs such as dumping duties or countervailing duties that companies aren't aware of for products coming from specific countries. And sometimes those duty rates can be exorbitant. It can be 50, 100%. So it's important to do your due diligence. They're not on a lot of products, but they're on some very important products. Certainly metal products. It can be, a wide variety of industrial and finished goods. Other examples, and this might take us into our value section. But companies often will have offshore research and development operations. If you have electronic products, you can have R&D, or even if you're just sourcing components that will go into the finished goods as they're manufactured overseas, those are called dutiable assists. Those, in most circumstances, I mean, they're very fact specific, but very often those costs should be added to the value of those goods coming in, which increases the valuation. And I'll just kind of tee up value here and then hand it back over to Beth. But you know, when we talk about classification, it's a percentage. The duty rate's a percentage, and that's applied to the import value of the goods coming into the U.S. And so there, what's called transaction value is used. That's the negotiated price between an arm's length negotiated price, usually between unrelated parties. You can have transaction value with related parties, but there's some special rules for that. So if that import value is artificially decreased or isn't full or complete, then companies pay lower duty rate, lower duties than they absolutely should. So customs always keeps an eye on the valuation. And so the R&D costs, the certain assist costs should be added. But I'll pass it back to Beth, and then I'll talk about another example of maybe some ways to reduce legally your import value.
Oh my gosh, you gave me so many great things to talk about. So assist, the way to think, anti-dumping. The way to think about anti-dumping is it generally is about countries we went to war with over industrial products. So ball bearings and Germany and Japan, and now there's some anti-dumping cases in China. Believe it or not, erasers are subject to anti-dumping, and tissue pom-poms and magnets are subject to anti-dumping. Anti-dumping is an importer's worst nightmare because those entries don't liquidate. And liquidate means customs decides it's a final declaration and customs will walk away and say, great, you did your job. With anti-dumping entries, they don't walk away and they keep an open investigation going. And so you might have something that had an anti-dumping duty of 50%. And the investigation keeps going and going and going. And ultimately, they come up with the final determination on the anti-dumping duties. And it's actually 300%. So every ounce of money that you could have ever made on importing that product could be lost with the final determination on the anti-dumping. So you have to keep your records. You have no idea. It's an open liability on your books. Your CFOs hate it. Highly recommend that you put a process in place that if a customs broker asks you to sign an anti-dumping reimbursement statement, bells and alarms should go off, and you should really look at that item. Number one, make sure it's classified correctly. Number two, determine if you really need to buy that thing from that country and be subjected to anti-dumping duty. The other thing with anti-dumping duties is they're specific to certain companies. And so we actually had a good anti-dumping story. One of our clients had solar panels that were subject to anti-dumping. And the way it works is they name company A, company B, company C, company D, and then they say everybody else. And everybody else tends to pay a higher anti-dumping duty. In this case, the importer was paying the other rate. And when we started looking into what they were doing, they had their own special rate that was 50% of what the other rate was. So we got them $1 million back, which was great. They still had to deal with anti-dumping, which isn't fun. So I want to piggyback, though, on a comment that David made, that customs keeps track of low values. So for every harmonized schedule number, they have a value range that says this thing will be between $5 and $2,500. And if you import that item at $1 or at $3,000, the customs system, the clearance system, is going to kick it out and say, prove to me that that value is accurate. So they watch it very closely. Note to everybody who's shipping around the world, this happens everywhere in the world. It's not just US Customs that does it. But it's really, really important that you use the correct value. And I want to give a really good example of an assist, just like David is going to follow up after I give my example. If I gave that ink free of charge to the Chinese manufacturer and then they shipped back my finished product, I gave the secret sauce, the value of the ink that they manufactured from the raw materials plus the value of the secret sauce should be what is declared on your customs invoice. And David, I know you had an example and I'd love to hear it.
Oh, I'm thinking of a variety of things. Well, well, from the value side, well, certainly R&D, anything that has technology involved in it, is going to have research and development costs. One exemption for adding that to the customs value is whether that R&D took place in the U.S. If so, it's not added. If it's foreign, it will. But there are things that often companies don't realize. If you're doing wearing apparel and you provide your labels or your buttons or other findings free of charge, the value of those have to be declared at the time of entry. So you really have to scan all the inputs that go into a good to make sure that that everything is baked into the value that you're declaring to customs. Just briefly, one strategy for maybe legally decreasing your value is when you have a situation where you're purchasing from a middleman or a trading company, and that trading company purchases from the factory. Normally, what the value that's declared to customs is that invoice price between you, the U.S. importer, and that trading company. But if certain conditions are met, customs will allow you to claim the value between the middleman and the factory as the import value. So if you have a really high duty rate, that can make a big difference on the amount of duties that you pay.
Yeah.
Of course, there can be some challenges there because your middleman might not want you to know that price from that factory. Or you don't meet some of the other conditions, like they were destined for sale to the export, for export to the U.S. at the time of that first sale. But there are strategies to do that for purposes of declaring that first sale price for purposes of lowering your duty rate or duty payments. And then also one instance that I've had very recently, in fact, I'm working on it today, where in a customs audit, internal customs audit, we've been going through and looking at the values along with the classifications. And when we requested all the commercial invoices for the entries where we were reviewing them, we found that there was more than one invoice for the shipment. And we're like, why would you have more than one invoice? Which valued, and the values were about 30% different. And as we looked into it, one of the values, the values that were declared to customs were the lower values. But what was actually paid to the supplier was the higher value. Well, that, especially as an attorney, that just all kinds of horrible nightmares come about thinking about fraud, other criminal sorts of things. Sometimes there are valid reasons for that, but that's a tough one. So you really need to be careful about the documentation. And in a customs audit, customs will look at the actual payment. It's the price paid or payable for those goods. And if that doesn't match up with what you declared to customs, there can be big problems. Beth? Oh, Beth, we aren't hearing you.
Thank you for letting me know. Some suppliers think they're doing you a favor by putting $1 on an invoice or lowering the value so your expenses are lower. That creates a huge risk for your company. There's a couple risks. One is that you get caught by customs and get a penalty. But the bigger risk is that you actually have to start declaring the correct value and you haven't calculated your true landed cost and you start losing your shirt and you can't afford to import that item. So really important to get it right going forward. One thing I did want to mention was samples. And a lot of people mess up samples and everybody wants to receive samples, everyone wants to ship samples, but a sample has a value and that value is the value equal to what the transaction value would have been if you had sold it to someone. Just because you're giving it to someone free of charge doesn't mean that the customs value is free of charge. It's entering the commerce of the country that it's destined to, and you have to pay the fair market value on that item. Couple people say, well, it's just a sample that's going to get thrown away at the end. The truth is you can't just throw things away in a country. The country needs to protect its imports and its customs in its own country, and so you have to use the correct value. Another thing with samples is sometimes people say, well, I just want to have a sample classification. I don't want to classify it as what it is because it has a section tariff. The reality is it is what it is and it's never going to change, and you have to use the correct classification for the item. If it is imported as a sample, and I'll give you a really good example, is jeans. If I want to import jeans as a sample, I have to cut a 4-inch square in the thigh of the jean so that it can't be used as jeans. Well, hopefully not, well, not stylish jeans. And so the reality is getting a sample in as a sample, you have to mutilate it, or you have to make it something that it can't be used on an ongoing basis. So really important to think about that. And so I'm going to talk a little bit, I'm going to move this a little bit. So we've talked a little bit of classification and valuation. There's actually a triad of things you have to think about when you import. And the third leg of the stool is country of origin. And so when you bring in something, you need to know what it is. When you want to pay duties, you need to know what the value of it is so that you can assess the duty rate against it. And then you need to know the country of origin. And that's where other things like the anti-dumping duties, the Section 232 and 301 tariffs come into play, and free trade agreements can also come in. I do want to make one just kind of like high level. When you're calculating landed cost into the US, duties and taxes are just an addition. It's a percentage of the value of the merchandise. Other countries have compounded duty rates. So for example, if I have something worth $100 that I import into India and my duty rate is $10, my total value for tax calculation is now going to be $100 value plus the 10%, $10 of duty. And then so my VAT and GST is going to be calculated on $110 in value. So when you calculate your landed costs, you really need to know how each country operates in calculating that. So David, I'm going to let you start talking a little bit about country of origin and what it means to have a country of origin rather than just be exported from a certain country.
Sure. So as we all know, goods rarely are made all in one country with inputs from just that one country. Things are multi-sourced around the world. The parts and components could be made in China and Vietnam and Germany, and they could be assembled in Malaysia. And so you as the importer and the customs authorities around the world, they have to have rules to figure out, okay, is the country of origin Malaysia, where the goods are, the parts are assembled, or are they the origin of some other country where the components came from? And so there are various rules in place. In the US, there's what's called the substantial transformation rule. And that's when you take a look at the parts and whether the assembly of them creates a new article of commerce with a different name, character, or use. And that's a judicial made rule, one that provides a lot of gray areas for importers. The free trade agreements, fortunately, often will have what's called a tariff shift rule. They'll take a look at, under the agreements, you take a look at the tariff classification of parts, and then you look at the tariff classification of the finished good in the country of assembly to see if sufficient processing has changed that tariff classification. And there are product-specific rules requiring certain amounts of processing that will result in those changes in classification. So with respect to free trade agreements, it's very important because to qualify for the duty benefits of, say, the US, Mexico, Canada free trade agreement, you've got to meet the rules of origin for that agreement, formerly NAFTA, to take advantage of the duty-free or lower duties for shipment between the countries. And then also one issue that's come about with respect to the Section 301 duties, goods coming in from China with those 25% tariffs, companies have moved certain key processing operations outside of China, say to Mexico or to Southeast Asia. And then those operations have to be analyzed in the third country, or the new country of assembly, with parts, say, from China and other countries, to see if that origin has shifted from China to, let's say, Mexico for purposes of bringing them into the US without the China 301 tariffs. Again, Section 301 is something where you have to undertake this, because there have been cases where you take an essentially finished good from China and you move it to, say, Vietnam, and you just do a few screwdriver operations and ship it to the US. The US will say, no, that's still origin China. So rules of origin and the country of origin are all very, very important. Beth?
I want to give you an example based on that. We had a customer, they had a 13-step bill of materials. So 13 stations where they did some form of assembly. They moved 9 of the stations offshore from China to Thailand. They made sure that the people doing the remaining 4 processes in China, that it was literally a simple screwdriver twist. It was literally gluing a piece with a pre-measured drop of glue so that there was no active thought needed, no technical knowledge needed. And customs still rejected our request to say these items were made in Thailand. So you got to be really careful. There's a process to request a ruling on country of origin out of New York, and it's generally running about 30 days. And I highly recommend, if you're thinking about manufacturing something, you can submit a ruling on a concept, list out what you're submitting, and list out what you're conceiving of doing, send in the ruling request and see if you do get the benefit of that substantial transformation in the country that you're moving to. Really, really important. One important thing, David mentioned the USMCA. It started on July 1st. So if you used to claim NAFTA, you can no longer claim NAFTA. I want to do a little one-on-one on any free trade agreement. There's 3 elements to a free trade agreement. First thing is you have to determine, is that tariff number, so is it correctly classified, is that tariff number even eligible for the free trade agreement? So what happens when countries sit down and they start negotiating a free trade agreement, they open the tariff schedule and they say this, this, and this HTS number can be claimed for USMCA or the Korea Free Trade Agreement. And so first, make sure your item is flagged as eligible for the free trade agreement. Second, you have to qualify your item. And that means you have to look at the rules of origin. You have to look at what your product is, where it's made. You have to have a costed bill of material, and you have to determine if it meets the rules of origin, whether it's tariff shift or regional value content. You have to calculate all of that. And you have to, I recommend having an audit trail to prove that you did it. And so then once you've qualified your item for the free trade agreement, then you can certify that that item is qualified for the free trade agreement. So many people go from, oh, I have duties, to I'm going to certify my products. My customers have asked me for a USMCA certificate. I'll just fill one out. Don't. Make sure it's eligible, make sure it's qualified, and then issue your certificates. And that's really, really important. The other point I want to make is a lot of people's free trade agreement programs are based on the fact that their clients have asked them to participate in USMCA. They've asked them to participate in the Korea Free Trade Agreement. And so they just knee-jerk say, great, I'll certify my products. I assemble them here in the US, no problem. Well, look at your tariff schedule. Again, this all begins and ends with tariff schedule. That's what David and I believe in. We absolutely look at your tariff schedule, and if it's duty-free, having something duty-free is unconditional. You don't have to pay duties, period, end of story, unless it's a Section 301 tariff that's been added on top of it. But if it's unconditionally duty-free, I highly recommend against qualifying it and certifying it for a free trade agreement, because that costs you money to do the qualification and manage the certifications. It also is a conditional duty-free claim, and you could be audited on it and have to prove it and show that audit trail. So you're just increasing cost to the manufacturing of your product if it's already unconditionally duty-free if you participate in a free trade agreement. So know your duty rates before you start thinking about free trade agreements. Okay, so David, I don't know if I triggered anything for you. Did we want to talk a little bit about some more examples on imports gone astray? I've got a couple that I can talk about.
Sure. I just one thing I want to reiterate that Beth said is the documentation point, because and also doing using a free trade agreement is very much a cost-benefit analysis. There are a lot of administrative hours and resources that go towards complying with a free trade agreement, and with, for example, under the USMCA for the automotive rules of origin, there is a requirement to track the amount of steel, for example, going into the finished good. And when you think about the hours that go from a documentation standpoint, and then the audit risk that's involved, because no doubt the auto companies are the first ones to be audited, but also in other industries as well. you really have to paper things and keep wonderful files, and you have to, and digital files. The days of paper that can get lost or that get smudged, those days are passing us by. So it's really important because we all have horror stories. And very briefly, I'll say, and I won't, this is all very general without even mentioning the industry, but I had a general counsel call me one time. I'd been working with them for years, and I didn't hear from him for a while, and he called and he said, David, let's talk about things in the hypothetical. What if and this was back when NAFTA was in effect, what if I discovered that in a file there was not a NAFTA certificate of origin? And we didn't have it in the file at the time the goods were imported. What's the ramification of that? I said, well, hypothetically, that means that the goods do not get the benefit of the NAFTA duty-free rate, because that's one of the requirements under the free trade agreement, that you have the certificate of origin in your possession at the time of import. And I said, and that's what I would advise you, and that's what's required by customs. And he said, thank you very much. And he hung up. And and I documented that telephone call in a memo to myself and to the file. But it's something that even if your good qualifies, if you don't follow the rules and you can't document it, it can come back with huge liability in the future. Beth?
I want to carry on that example. And since we've been talking about free trade agreements, we had a client that falsely claimed NAFTA on quite a few $1 million worth of imports. And the reality is that they shouldn't have, and customs caught them. And so we were called in to actually help them figure out what they should have paid in duties and make restitution for the underpaid duties or zero paid duties. The reality is, when we sat down with them and said, tell us what you're doing with this crazy stuff, they were shipping product down to a maquiladora in Mexico, where they were refurbishing the items. So yeah, the items didn't qualify for NAFTA. They weren't eligible for NAFTA, but it turns out if you are refurbishing something abroad, there is a duty provision to bring goods back into the US and only pay duties on the value of the added value of the refurbished activity. So we took a potential NAFTA duties due of $24 million, and we turned it into about $18,000 that we actually had to pay the duties just on the refurbishment. So you have to understand your supply chain and correctly declare it when you are importing into the US, and make sure that you understand exactly what you're doing.
So
Kevin, I want to check in with you on time. Oh, sorry, David.
No, go ahead. Yeah, we should check on time because we're getting, should we start kind of wrapping up with some final thoughts?
Yeah, and then we also want to leave some time for some questions as well. So why don't you go ahead and wrap up final thoughts, and then we'll open it up for some questions. I've got a few questions already sent to me.
Sure, go ahead, Beth.
So on the big thing I have is, number one, get your ACE report, run the report, and make sure you have documentation retained for every import that you have. Take it a step further. I recommend you look at the duties and taxes that you paid and the value you declared, the tariff schedules you claimed, and the origins. People make mistakes, honest mistakes, and you'll find them on your ACE reports and get them corrected. There's this wonderful process called the post-summary correction, where you have like 300 days to make a correction to a customs entry without having to file a protest or do anything formal. You can just correct it. So take advantage of ACE, look at where you're spending your money, look at what you're saying you're importing, and make sure that that's really what you are importing.
And I'll just reiterate what Beth said, that's all great advice. And it's data. You need to, that ACE account is very important because that's what customs sees, and that's what customs will review and uses algorithms to figure out who are the high-risk importers. I'll also just mention, customs compliance is the two-edged sword. It's either put some resources towards complying with the classification, valuation, origin rules that customs enforces, put resources towards that now, or down the road where there's a problem. There can be investigations, there can be prior disclosures with penalties perhaps if the disclosures aren't done correctly. So it's either pay now, pay a little bit now, or maybe pay a lot more later down the road. And then just one final
I
thought.
want to add to that.
Yeah.
Oh, sorry, David. I'll add to that when you're, no. Teach your purchasing people how to do landed costs. Don't expect your shipping person to do it. Sorry, David, I cut you off.
Yeah, your purchasing people and your finance folks for keeping some sort of process to see what's actually being paid so you can match that up to your import values being declared. Lots of internal controls need to, if they're put in place once and they're kept in place, and it can really resolve a lot of future problems. So just in closing, I think also it's very important to read the newspaper every day. Read trade publications, use the resources that the Northern California World Trade Center has, because things are rapidly changing with the trade wars, with everything, what happened with Hong Kong last week, and its changing status. So it's a fast moving environment these days, and everyone needs to stay on their toes. Kevin?
Great. Thank you, Buzz. So I recognize I must be a trade geek because I listen to the two of you talk and I just get all excited. It's like, this stuff is so cool. So one question that came is can multiple post-summary corrections trigger customs audits? In other words, if you go to ACE, you see that you need to do some corrections. If you do multiple, will that trigger an audit?
Beth, you want to take that?
It should, but it doesn't. Customs actually is watching to see when you get hit by a section tariff, that if you switch it, they see duty evasion that way. But if you're actively going in and managing your import account, you actually should be making post-summary corrections. People make mistakes, clerical errors, all that kind of stuff. If you're having to make a lot of changes, you might actually want to consider a prior disclosure to protect yourself against any penalties, and just explain, I noticed that we had this legacy classification that turns out it was incorrect based on a new ruling that came out. So we're going to change it. And then you realize that ruling was revoked. So you changed it again. Just have an audit trail. Customs wants to see that you're managing your account.
That's right. And I would just add that, a pattern, if you have post-summary corrections, and they're ongoing and you're not correcting the problem, that could certainly spark a request for information by Customs. But certainly document everything that you're doing, because as Beth said, Customs wants you to constantly be reviewing things and correcting things going forward. But you do want to keep a trail of memos and in your files, making sure that you document what you're doing.
Great. And I just want to add to something that Beth said, and that was about the paying duties on the value of refurb done in the United States. Also really important for people that are re-exporting those products back, because on the other side, I know we ran into that in a former life. And once we figured out how to take and properly declare that, we saved international business partners a lot of money on the reimportation of equipment that we had repaired or refurbished. So that's something that can really help you with help your partners as well. One of the key things that clearly came through is making sure you've got the harmonized code. Are there any good online tools to help people figure that out?
Well, there are some. Yeah. If you look at the hard copy, it's very, very thick. There are some online tools, some of which some are better than others. I think starting with kind of the fundamentals, and as Beth mentioned, the Informed Compliance publication on tariff classification is issued by Customs headquarters is a good way to go about that. A customs broker, when they take the test, they have to understand the general rules of interpretation, the key rules for at the beginning of the tariff for classification. There are online tools, and Beth, I don't know if you use those regularly, but I'll let you speak to that.
We subscribe to some tools, which it's worth paying for, and that's just the reality of it. But there are some free landed cost calculators out there. I'll give a hint. If you go to some of the couriers' website, you can actually go in, sign up for an account, and type in your information about your product, and it takes you through some decision support tools and trees to figure out the classification. The USITC publishes the harmonized tariff and has a great search engine. And then I highly recommend, and it's free, it's on the Customs and Border Protection website, and it's called CROSS, C-R-O-S-S. And You can literally search by, you know, I have a, what did I do recently? I have a artificial intelligence for gear shifting on a, you know, AI car, and there are rulings for products, and you can read through that. Do not just accept the tariff that is listed in the ruling. Read through the ruling and make sure it applies to your product. Having also read the Informed Compliance publication, because you'll understand a lot more of the language. But Crocs is a great place to go. It's not the place I start at, but it's a good place to confirm your classification.
And I was on Cross right before this presentation today, so I'll attest to that. And also to mention, you know, Beth mentioned that you can go for a customs ruling on origin. You can also get a ruling from customs in New York from the National Import Specialist for classification, and we recommend doing that. It usually takes a minimum of 30 days. They come back for more information. It can take, you know, 60 days, but relatively fast. And if you have it in writing, that's certainly good.
Great.
Yeah.
So, Beth, you mentioned about having knowing if a product was subject to anti-dumping duties, and that I can't remember the terminology. Effectively, the investigation could be left open, and you could be subject later down the road to a higher anti-dumping duty. Is there a consolidated list, or how can a company know whether that product is potentially subject to that? Other than, I mean, obviously.
So you picked my one, like, this is a big sore topic here. I would love to see the harmonized tariff schedule have flags that say this could potentially be subject to anti-dumping. It's not that clean. The customs ACE system actually has a lookup tool for looking up anti-dumping and countervailing duties. It's not the best search engine. There is the International Trade Commission that publishes all of these cases, but they're organized in such a haphazard way. You can't just go up and say, tell me about ball bearings, and see all the ball bearings. I really don't do anti-dumping without support. And that's just my advice. Talk to somebody who understands it, who can tell you whether or not you are subject. We literally will take I mentioned pom-poms earlier, a paper pom-pom, and look at it, its dimensions, we'll compare it to the anti-dumping ruling, and we will determine if the size and function of the pom-pom actually qualifies for getting hit by anti-dumping, and we'll issue an advisory notice saying you're not subject or you are subject. And it's really hard to read these rulings, and we bring in experts when we're reviewing it. Do not do this at home alone. Not my favorite thing to do. It's a very complex area.
Right, so this is one of those cases where you really want to have some significant expertise on your side helping you to get through that.
Guaranteed. It's an investment worth making, because if you are subject, you're making a commitment to, like, endlessly have this cloud hanging over you that you might have to pay more duties in the long run. And you might want to get lobbyists involved to fight the cases, right, David?
That's right. I mean, I have a lot of experience in this area, going way back to being a junior associate at a firm. And, you know, the International Trade Administration at Commerce, if you go into the ITA.gov website, they will have a list of the pending investigations and administrative reviews for dumping and countervailing duties, and it's by country. If you go and you click on China, there will be a list of all the active cases. Now, that's just the starting point, because each one of these cases will have scope language. And the scope language is very, very technical, and you have to determine whether your goods that you're importing fit within the scope. And as Beth said, you have to tread very carefully here, because Commerce and the International Trade Commission, their rules of origin are different from the customs rules of origin. Even though something might be flagged by customs as being subject to dumping, the U.S. Customs does not make the determination of whether it's subject. So again, there are some resources at ita.gov, but it's very technical.
Okay. Two last questions. So I think, David, you kind of hinted at this. Sounds like there is a shift. You're seeing a shift in supply chains to avoid the 301s, Section 301 tariffs.
That's right. I mean, when you increase your prices by 25% to take into account those tariffs, companies are looking for other sources. I think Mexico probably is one country that's going to benefit from it, not only because they aren't subject to the 25%, but you have a free trade agreement and the transportation costs are often less. But then, you know, a lot of companies have huge investments in China. They have suppliers that they really trust and have worked with for many years. And that's when you start kind of looking at your supply chain and seeing, okay, if we purchase this subassembly and then we move it to Mexico or Vietnam or to Europe, or bring, can we manufacture our goods and maybe change the origin such that we're not subject? But yeah, companies are really examining their supply chains to see what options are out there.
Good. Last question, and this is, you both get a chance to get out your crystal ball. Any thoughts on the future of the U.S.-China tariffs and where things are heading?
Beth, you want to start?
The easy question for last.
I have been so invested in this. And so I have written a plan on the Section 301 and 232 tariffs and submitted it to various candidates that are currently running for president. I do not believe that the Section 301 tariffs are going to go away if we have a change in who our president is. And so we're going to have to get used to it. We're going to have to start lobbying. And in my plan, I sound like a certain candidate. In my plan, I suggested that we actually leverage special import and security programs that we've put in place, like Customs and Trade Partnership Agreement against terrorism and the Authorized Economic Operator. And if countries or companies join those programs, they would be exempted from the tariffs. Nobody's picked it up yet. This is a great plan. I'm working on pushing it. Luckily, some of them are stuck at home and are actually reading what I'm sending them. So stay tuned on it. I think we have a lot of lobbying to do on these tariffs. There is an issue with China stealing our intellectual property. We have to end that. The tariffs are not the way to end that.
Yeah, and picking up on that, I think you're right. We're not going to go back to the way things were 2 or 3 years ago with respect to China. I certainly think the Section 301 tariffs are going to stay in place through this political year. But even if there is a change in administration, I agree that the relationship with China, I think, is fundamentally changed. Now, as an economics major in college, I don't think tariffs are the most efficient way to get what you want. But there are many other tools, and hopefully those other tools will be used, whether they are sanctions, whether they are incentives, or a combination. I think it's something that you have to look at daily. You can't cede this to someone else to feed it to you. Obviously, experts have their own opinions, but things are changing so rapidly. Every morning, I'm logged into newspapers and wire services all day long because advice I gave in the morning might not be any good in the afternoon. So it's a rapidly changing landscape out there.
All right. Well, listen, thank you both very much. It's really a pleasure to get to work with you both again. Diane, I'll turn it back over to you.
Thank you, Kevin. And thank you, Beth and David. Wow, that's a great deal of information. And just, I'd like to say in closing that we will send out the recording so you can review all this information, and of course, contact information for our panelists. Here at the World Trade Center Northern California, we do offer no-cost one-on-one consulting. So if you have a quick question you want to get out to us, we'll be happy to help with any of that or any kind of assistance you might need. Also, do please follow us on Facebook or on LinkedIn. And as a programming note, we have an upcoming webcast on cross-border e-commerce. We touched a little bit about the USMCA. That's been potentially a big pivot point for small to medium-sized enterprises who are looking to maybe get some global strategies developed so they can hit this recovery. So that's going to be on July 30th. I've put in my details there in the chat. So if you want to subscribe to our newsletter or for coming information, please do contact me. Again, that's cross-border e-commerce on July 30th. So thank you again as your host, and on behalf of the World Trade Center in Northern California, I'd like to express my deepest appreciation for Beth and David. Thank you both for joining us today, and thank you everybody else. And we look forward to seeing you again soon. Thank you.
Thanks for having us.
Bye-bye. Thank you.
Thank you so much.
All right.